Should you go long on Bitcoin after its breakout pattern? If you're interested in knowing more about this, please keep watching. Bybit is one of the best exchanges I've ever used. It provides great market depth, a smooth user experience, and an impeccable interface. So go ahead and click the link below to enjoy a $30,030 bonus from the trading. This is a great offer. BitGet offers a $100 trial fund after completing Know Your Customer, KYC, and a $100 deposit. Currently, there's a trading competition held by BitGet X Crypto with a chance to unlock the maximum prize pool of $15,000, which is very generous. Well, let's take a look at the Bitcoin market. Well, the Bitcoin pattern has a breakout. However, should we go long? Before we start, I have an update for you. This is a quantitative platform I developed. This platform will be published soon. In fact, everything about it is on set. We're now implementing the trading strategy and have almost finished debugging the codes. Most of the major and minor errors are addressed. Hopefully, it operates perfectly after it goes live. I've deposited an $800. I invested this $800 in both OKX and BitGet exchanges by binding them to the platform via API. As you can see, a profit of $11.93 is generated based on quantitative analysis. Though the figure seems insignificant, the amount I invested in the exchanges, not in this platform, through API binding is small too. So, the profit return is quite good. I think it's pretty well done. I will let it run for a month. And to assess its performance, I'm planning to deposit $10,000 first and let it run further. On this platform, you can track current and historical positions, profit and loss, and orders, where every trading record is clearly calculated and displayed. This is a comprehensive platform we developed after completing all the tests and ensuring that the platform generates profits. I will open it up to the public. This platform helps you to generate profits automatically. It's very convenient. Alright, let's examine the Bitcoin market now. A breakout can be seen in a small time frame, but I think we should consider the big picture. Let's start with the daily candlestick chart. So, what can you observe from this chart? Where are the starting points of the two trends? Yes, the starting point of the first bullish trend is right at this point, according to the wave theory. However, I choose another entry point. Right there. I will choose this point. The following trend starting from waves 3, 4, and 5 shows the most lucrative part of this uptrend cycle. We must seize our chance here. Likewise, after the second uptrend cycle starts, where should we enter into a trade? At this point, as you can see, both of these uptrend cycles share something in common, which is a surge in trading volume. A surge in trading volume occurs. The trend is going upward, then followed by a correction. By rights, the next price action rise should appear. If the rise appears, we can consider going long. But if not, it's ill-advised to go long. Look at this point. Does it show a similar situation to the previous one? For example, a long candlestick, in which the real body is long, with short upper and lower shadows? The ongoing trend doesn't show that. Second, let's see if the trading volume rises. No, it doesn't. The current trading volume is shrinking. What does this mean? It means that the current market is still undergoing a correction. Perhaps you may think the price action rises a bit, but, in fact, it's undergoing a correction. No matter how much the price rises, it can't escape from the reality that volume exhaustion is happening. That's why I think it's in a phase of correction, and not yet in the next bullish trend. I think the next bullish trend hasn't started yet. In the current uptrend, I didn't enter a trade. I only have spots, and I hedged them, which earned me a small profit. However, I didn't trade on my futures position during this uptrend. Alright, let's switch to a smaller time frame. In the smaller time frame, we can see a box here. The price action develops very definitely, depicting a clear boundary. So, I will mark the upper boundary. You notice that whenever the price action touches the upper boundary, the trading volume shrinks. For instance, at this period and this period, look, a distinct shrink in the trading volume is shown. The same case happened in the earlier periods too. This behavior, the low volume test. Well, I've talked about this in my channel before. A secondary test of low volume normally happens when the price action hits the bottom. When it happens at the upper boundary, a congestion area is formed, leading to a shrinkage in trading volume. It's actually a bad sign. We've seen similar situations before. There are two kinds of tests. One, when the price action falls on the lower boundary. A low volume test is performed during the downtrend. At this point, a low volume test is launched when the price touches the lower boundary. Look at this point. The trading volume shrinks. The trading volume shrinks to test if the price has bottomed. After the test, it's found that there's no more demand. Sorry, it's the opposite way. There's no more supply. No supply. The supply is exhausted. So the price tends to move up. If a low volume test initiates when the price action touches the upper boundary, it's clearly a dangerous signal. For example, low volume tests. At these 2 points, the trading volume started to shrink significantly when the price at the resistance level is tested. This behavior reflects the exhausting demand. Exhausting supply at this point, and exhausting demand at this point. So, we're expecting the next round of retracement. Well, I'm not telling you to do short selling immediately. I can't find a convincing reason to go short during this period. Going short now is simply meaningless, as you don't hold spots and open a short position. You will only make money when the price falls. I won't do short selling, given the ongoing trend. As you can see, we're clueless about the right side trend. If you want to short sell, you should wait for a clear sign of the right side trend before doing so. No sign of a right side trend now. If you were to go short now, it would only be the short position of the left side trend. If you want to go long, it's pretty risky too. Currently, my focus is on diversifying the risk of my spot positions. I'm holding spots now, and I find a warning sign here. So, I'm going to hedge the risk of my spots. This is the focus of my current trading operation. I will avoid the risk on my spots. Look at the trend line. When the price tests the resistance level, the trading volume starts shrinking. To some extent, it signifies exhaustion. In terms of demand, maybe we will expect a correction, and the price action will rise. It's possible for the price to go sideways. It has no problem. However, I think the correction hasn't ended yet for now. That's why I don't go long during the breakout pattern. The breakout pattern can be easily observed, right? All of you can notice the breakout pattern. Let's talk about the breakout pattern. Draw the line here, right? You might be confused about whether to go long when the breakout trend appears. Actually, chat patterns just help you identify potential entry points. We need to develop our own strategies to open positions. So, what's my strategy to open positions? I will only open some when a trend is established. So, can a trend establish here? I think it's still undergoing a correction. It's not likely to have a trend established here, even if a trading opportunity shows up here. Yes, it's a trading opportunity here, but I didn't take it because I think it's still in a phase of correction. Not yet the next bullish trend. Let's take it the Ethereum market. Speaking of Ethereum, I suppose you've probably all heard about the Shanghai upgrade on April 12th. The price action is indeed bullish. Indeed. There's no denying it, because the bullish news is going to be realized on April 12th. But you can see that the uptrend doesn't seem powerful. Of course, it's relatively stronger than the Bitcoin market. But during the uptrend, there are long upper shadows on several candlesticks. Judging from the weekly candlestick chart, the price action has reached the resistance level. Did you see that? Personally, I have two concerns. First, the price action has reached the resistance level. Second, we're expecting a bearish market on April 12th. Due to its bullish expectations, Ethereum will face heavy selling pressure due to the Shanghai upgrade and the unlocking of pledges. So, I'm planning to hedge some of my spot positions. Besides, I'm going to sell parts of my positions in Ethereum. Of course, I will take it back. But right at this point, I plan to sell some of them in several batches. Alright, thank you. You're welcome to like and share my videos. And subscribe to my channel. Turn on the little bell button to show me your greatest support. Thank you so much. Bye-bye.
Eyes in the sky, gazing far into the night. I raise my hand to the fire, but it's no use, 'cause you can't stop it from shining through. It's true, baby, let the light shine through. If you believe it's true, baby, won't you let the light shine through?